Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from our Lagos studios here in Nigeria. I'm Chimezie Obi Iwago. On the show today, South Africa's MTN expects IPO of Nigerian unit this year. Tunisia seeks to recover $2.72 billion of bad loans. Plus, World Bank sees Kenya's GDP growth rebounding to 5.5% in 2018. We start off the show with the markets, and here in Africa, both the NSE and the JSE index were down at intraday. The NSE index dropped 0.07%. However, the shares of troubled energy trader Oando Nigeria PLC moved up to maximum 10% to 6.99 kobo within the first 1 hour of trading, after news filtered in that the Securities and Exchange Commission has ordered the stock exchange to lift its 6-month share price freeze on Oando Nigeria. Now, the JSE index was down 0.49%. Egypt traded higher by 2.08%. Kenya closed up on Tuesday 0.07%. In the Middle East stock markets, we are mixed at intraday, although builder Drake & Score was strong in Dubai. The Dubai index was up 1.40% as DSI, the most heavily traded stock, climbed 2.4%. It has been trading near 5-month lows. The Abu Dhabi index was down 0.47%. However, Abu Dhabi National Energy Corporation gained 2%, continuing a strong 3-week uptrend. The Qatari index was down 0.09%, weighed down by banks and insurance stocks. Al Ali Bank was down 1.9%, and Qatar General Insurance and Reinsurance slipped 0.6%. Saudi Arabia's index was down 0.05%. Saudi paper fell 1.9% after its board proposed a capital decrease to 240 million rials from 450 million rials to extinguish accumulated losses of 210 million rials. And in Europe, equities moved lower in early trade as investors began to focus on earnings at the start of a new reporting season, plus other corporate news on the wire. Now let's bring in Daniel to tell us more. Hello, Daniel. Good afternoon.
Hi there, Jimmy. Hello from Frankfurt, where the stock market, I guess you can see it in the background, is a little bit suffering, down with 1%, as those war tension between the United States and Syria, involving also Russia, is getting very heated up. This morning, Trump was tweeting that Russia should get prepared, that he will be firing missiles over to Syria, and that the relationships with Russia have never been as worse as they are right now, not even during the Cold War.
That has really rattled a lot of markets, including the global oil market. Anyway, let's look at some of the corporate news coming in today. Volkswagen is replacing its Chief Executive Officer, Matthias Möller. What's new behind this change of leadership at the auto giant?
Yeah, this, Jimmy, came absolutely as a surprise. The news was breaking when we were talking already yesterday. Investors here at the Frankfurt Stock Exchange were almost shocked about this very crypto ad hoc message sent out by the company. And also, frankly speaking, all of this did not show really lots of appreciation to Müller. Bringing this sort of rumors into public without sharing exact details and not giving him even the chance to say something in public is not common at all. But yes, investors for the moment are taking all of this now very positive. Already yesterday, the share price of Volkswagen was among the top performers here at the DAX. We are also seeing today a plus. Besides some pending lawsuits, the worst of the so-called Dieselgate scandal should be over. And it's time now, that's what many investors are saying, for a new strategy. E-mobility, higher margins, cost cutting, all of this will be the #1 priority of a new CEO, most likely Herbert Diess. He is known to be a reformer, and investors here are very optimistic that this is going to be the case with him. But talking again about Müller, yes, he was a crisis manager. Investors have praised him for that. A company very much in the crisis mode with high fines, lots of negative PR, but at the same time, we have to remember that as well, reporting record after record. We have to remember in 2017, Volkswagen never sold as many cars as in that year. But we're also now learning that behind closed doors in Wolfsburg, that's the headquarters where Volkswagen is located, the CEO has been lately very much under fire. Some have said during the past months he was rather wary in office. He was also criticized heavily when asked about his 10 million euro annual salary and made comparison by that time with the former GDR regime. Also, it seems that the board members were hoping for a complete new start of the company and felt that Müller was simply not anymore the right person to be the face of a new Volkswagen, whatever all of this is really going to mean at the end.
Well, I guess change is the only constant thing in life. Let's just wait and see what the new CEO would bring to the table in that company.